Our audio is okay. I've got the famous James Stephenson here with me. You probably recognize him from Twitter with his awesome Tesla insights, his charts, his trademarked James Stephenson Indicator to tell us what Tesla's long-term trend line is sitting at. Welcome to the channel, James.
Well, hey, Ashu, it's a pleasure to be here. Thank you for inviting me on the channel.
Absolutely, my pleasure. Let's talk. Well, yesterday we know Tesla quarterly earnings came out, Q2 earnings. Everyone and their mom thought it was going to be an ugly, ugly quarter. And it wasn't as pretty as it could have been, granted the shutdowns, of course. But what were your overall thoughts about the quarter, and how do you kind of see Tesla in the second half of this year?
I was happy to see an earnings beat, right? The non-GAAP earnings came in higher than I was expecting, higher than almost everybody was expecting.
Hmm.
I think Troy was at the high end of the range of retail analyst projections that I had seen
Hmm.
on Twitter, and they beat even his number for different reasons. Of course, none of us anticipated that Tesla was going to sell 75% of their Bitcoin during the quarter and knock down the amount of Bitcoin impairment they needed to pay by 3/4 as a result
Hmm.
of doing that, right? So it came in at 100 million instead of at 500 million, right? Um,
Yeah.
so that was helpful to Tesla earnings, but they also beat kind of my expectations elsewhere as well on all the revenue lines. So automotive, energy, and other all beat what I was expecting in terms of revenue per share,
Hmm.
and the expenses came in a little lower. Notably, research and development costs came in a lot lower than I expected, than I think most people expected. So those were all highlights.
Yeah, Tesla kind of saved the day with the kind of Bitcoin sale to a degree, right? Because you looked at the kind of OpEx line and you're like, wait, what? Like, how is it so low? And of
Yeah.
course, you kind of originally like, or at least I was like, okay, maybe R&D. I was like, even R&D, you couldn't squeeze that much juice out of that. Like, and so Tesla selling Bitcoin, I know it's controversial to say the least. I mean, it's well, I should say it's probably a heated topic. We don't have to get too much into it. Uh, but are you pro against Tesla selling their Bitcoin or most of their Bitcoin, I should say, as it kind of stands? As we, by the way, you're also good juju because we also just passed $800 in the stock price as we went.
Awesome. Happy to be good juju for the stock price up over 800 again. It needs to keep going for a while to catch up to Stephenson Indicator. It's got a long uphill journey ahead to make it back.
Indeed.
But my thoughts on Bitcoin, it doesn't matter that much to me. I mean, when Tesla sold Bitcoin, there's a lot of confusion out there over whether Tesla was able to boost their free cash flow during the quarter by
Mhm.
selling Bitcoin. And just to clear that up, no, you can't change the amount of free cash flow your company generates by buying or selling digital assets. This goes
Right.
in the balance sheet as an asset for asset swap. You had
Mm.
cryptocurrency and you swapped it for fiat currency. There's just two different kinds of assets, right? So it hits on the statement of cash flows as an investing cash flow. So you see it there recorded as proceeds from sale of digital assets, and that was in Tesla's release. But the formula for free cash flow is operating cash flows minus capital expenditures. So there's no way to change the amount of free cash flow with investing cash flows
Mm.
unless they're capital.
Right. Got it, from the factory line. And
Yep.
so when they sell the Bitcoin now and they're sitting in fiat and I think Martin, pardon me, I think probably Zach mentioned on the call that they wanted to diversify into fiat given USD was getting a little bit strong and there was some foreign exchange risk there. Do you foresee them doing something with that cash other than just sitting in cash, or was it just because they saw USD rising as much as it was and they wanted to offset some of that risk?
Well, my recollection of the earnings call is that Elon jumped in to explain the Bitcoin sale as being the Shanghai lockdowns and Tesla not knowing how long those were going to go on for. So he said they were looking for more liquidity. So, what that could mean is that Tesla sold the Bitcoin for yuan, for Chinese currency,
Hmm.
so that they would have more liquidity to continue paying expenses denominated in Chinese yuan
Got it.
during the lockdown because they weren't going to be able to be generating revenue from sales in China. without the production available to them. And it would also explain why the foreign currency exchange impact was a little bigger than it normally is in Q2 if they had to then repatriate some of that.
Right.
Normally, you don't have to worry about it when there's a match between the amount of revenue you're making in a country versus the amount of expenses that you're spending in that country. There's no need to convert the currency. If you have obligations that are in that currency, you just pay them directly, and then you don't have to worry about the Forex impact.
Gotcha.
It's always a little confusing in this stuff. We might get a little more insight when the 10K comes out.
Right. Right. Is there anything outstanding that you're looking for still for clarity in that 10K per se, or is it just you're just going to go for it?
So the one that I ran into this morning was I was trying to tweet out the EPS breakdown, so all the revenues per share and all the expenses per share.
Yeah.
I had to still estimate the stock-based compensation breakdown by type of expense because that wasn't in Tesla's release yesterday. We'll get that in the 10K. But what I did was I just held to the spread of stock-based compensation by type that I had forecast and place held that in order to update that chart and send it out. So that's one of those items, but there's tons of info. All the notes in the 10Q, 10Qs come quarterly and 10Ks come annually. So all those notes are really handy for explaining what's in each bucket. So stuff like Elon's stock-based compensation expense, you would not be able to figure that stuff out without reading the notes that are in the 10Ks and 10Qs that talk you through, okay, what's going on with this? What's in this number?
Yeah, for sure. And FSD deferred revenue, perhaps some insight on that. I know, and that's actually one of my banners I want to get into. Before I do, actually, I just want to highlight this comment here from Dan. We were talking about this, Dan, right before we went on online, so we didn't mention it. But where does your Stephenson indicator put us today, just for everyone listening?
Yeah, let me bring that up.
And if you don't know what that is, by the way, if you're listening, it's a super duper fancy trademarked indicator that James has come up with. That it's like a long-term trend line for Tesla over a multi-year basis. And when we're having bull runs at 13 or 1200, I remember looking at your tweets and being like, what? How's it only $750? And now it's sitting at, drum roll, please.
I'm going to share screen 2 because the app is on screen 1, and I'll move my earnings model out of the way, and I'll move my Twitter out of the way, and you can look at my background for a second. While I bring it up, you'll pardon all my other tabs here. This is my 70-inch TV that I use for my nice 2K display.
Sweet.
Here. So today's Stephenson indicator is $1,067.65. So you can find this Google sheet out there for Tesla stock data. And this is what Stephenson indicator looks like. Maybe I'll make this a little wider to get a little more space in between those bars. So for a long, long time, Stephenson indicator was doing a pretty good job of not getting broken. So it was a pretty good support line for Tesla stock with only a couple of temporary dips below it.
Yeah.
And then the bear market came right around here, right? January 2022. And the stock price has been below Stephenson indicator most of the time since. So I did put out a tweet a while back labeling a bear market way over here, a bull market all the way over to January.
Yeah.
And then another bear market here. So you can kind of see them real clearly if you look at it this way.
Yeah, that's a great visualization. It's almost one-to-one tracking with the Fed's balance sheet. Awesome.
Yeah.
So what's interesting, though, looking at that chart, even just for a hot second, is that how ugly the last, consecutive 60 days or however long that is, couple of months there, that is. Like, it's been ugly.
Yeah, it's been real bad since May. Those were kind of the lows back here, if you want to think of it in percentage variance to Stephenson indicator. But the formula is very simple. You take this closing price over here of 72.24 on March 18th of 2020, and you add $1.69 per trading day. and that's Stephenson Indicator.
So the $1.69, that just came just by kind of pure
It
luck.
just fit, and it was funny to have a 69 be part of the formula. So
It just ended up being the slope. That was it. It was, or
yeah,
ironically.
yeah, it's just a dumb line, just a dumb linear technical analysis support line.
Love it.
So
Well,
yeah,
thank you.
it was fitting, along these months.
Nice.
And Mayor Thaker actually on Twitter told me that I should trademark it at Stephenson Indicator, which I thought was hilarious. So ever since then, when I tweet about it, I put the TM after it. Hopefully to try to encourage people to realize this is a joke technical analysis indicator. But I think there are some people who are trading. Well, I know for sure there are people who are trading Tesla stock based on variance to Stephenson Indicator. So I wish them all the best of luck with that strategy. I've been buying Tesla stock since about 2014, so I just
Right.
add to my position when I can.
Right. Right. And as we say that, 803 sitting on Tesla, 803 hits different nowadays than it did just a few months ago.
Yeah, that would have seemed like really bad news in January, but we're happy to see 800 again at this point, I think.
Yeah, for sure. How do you see, like, because, the earnings call, I think everyone knew was going to be a little bit ugly and no one really knew what to take into account with Bitcoin and the expense there and the restructuring with the layoffs. How do you see like the second half of this year? Because I'm really excited about and jazzed about quarter 4 per se, which I kind of get some pushback in the comments being like, well, you're kind of glossing over quarter 3, which I get. But let's call it like the second half of this year. There's a lot to be excited about with 2 new factories ramping up, 4680s potentially coming to a higher ramp in Berlin and maybe Austin, and then margin enhancement from those, and then of course adding in potentially some sort of FSD potential beta news, which I'm not sure. I was going to ask you if that means that Tesla can recognize more revenue on that side either. But how do you see the second half of this year?
Yeah, you're right on all those points, I think. So the main benefit to Tesla is going to be getting a full quarter of production out of Shanghai. Well, I shouldn't say a full quarter. There is a shutdown at the beginning of July to improve the lines to allow a capacity expansion for Shanghai. So we expect them to get right back to record monthly production in August and September. And that's Tesla's most profitable factory. So getting them back at full strength by early in the quarter is going to be really good for Tesla. Continuing to ramp in Austin and Berlin will be good. Fremont will continue to plug away, and they're making money.
Yeah.
Energy is looking pretty good as of Q2, so that's promising. A little bit of a seasonal business there, but hopefully we can get some continued improvement out of them because they were not always very profitable. They were sometimes unprofitable.
Yeah.
So it sounded like no concerns on cell supply from Elon, at least for the remainder of this year, having enough 2170s to produce all the vehicles they need and to feed energy storage the cells they need to sell all the products that they can.
Yeah.
So those are all good. And then, yes, FSD, deferred revenue, you mentioned. To the extent that Tesla is able to roll out FSD features to more owners around the world, they will be able to take more of the revenue that's now sitting on the balance sheet as a liability off the balance sheet, move it onto the income statement as revenue. Pardon my phone ringing in the background.
All good. All good.
So yeah, a lot to look forward to in the second half. Expect a return to record numbers again.
Yeah, I think the interesting part with, and Elon, by the way, if anyone missed the call yesterday, Elon mentioned that he's still on track. He thinks FSD beta is still on track for wide release this year. And I was confused because as FSD beta wide release, right now, what 50-60% of FSD or something like that is recognizable as it stands at the moment. So the interesting part for me is more so, if FSD beta does go into wide release, is that now fully recognizable, or is it because it's still beta but wide release only, let's say 60 or 70 or 80% recognizable at that point? Do we have any insight on that?
So you have to get agreement between the finance, the legal, and the external auditors on that topic. So the breakdown goes like this.
Okay.
Tesla has been selling full self-driving with a bulleted list of features underneath it. And that bulleted list of features has changed over time in terms of what Tesla has claimed. So depending on when you placed your order and purchased full self-driving, that determines what obligation Tesla has to deliver those features to you in order to be able to claim all of the sale price of that full self-driving. So the deferral is about, hey, you can't sell somebody something, not deliver it, and still claim it as revenue. That's not a thing. In the accrual basis rules for accounting, GAAP accounting rules, if you partially deliver something that someone has paid for all of already, you can take all the cash and you can spend the cash if you want to, but you can't call all of it revenue on your income statement yet. You have to earn it first by delivering everything you promised. So those are the rules. So it gets declared based on which owners get which features when and what percentage of the total purchase that represents.
Right. Okay. By the way, I just noticed your shirt. Can you show everyone your shirt?
Yeah.
Look at that.
Yeah. Here's
awesome.
Here's Elon hanging out on my t-shirt.
Nice.
Yeah, I got a few different Tesla t-shirts. I like black t-shirts, so it looks like I'm wearing the same t-shirt every time. But I'm not.
Yeah.
They're different.
Awesome. So yeah, I mean, FSD. Personally speaking, I haven't driven an FSD, just autopilot. So I'm kind of I have to take my purview from watching YouTube videos from amazing people that put out content. Do you have any experience with FSD yourself? How bullish are you on it coming online this year?
Yeah, I've had full self-driving beta on my Tesla Model 3 since December of last year. So I've gotten to see it get a lot better over the years. Well, over the 8 months that I've had it, I guess. So it was requiring a lot of interventions back in December. And, I know a few people on Twitter that I DM with who also have had FSD beta longer than I have. And I would message them and be like, hey, I only went a couple of miles and I had to intervene a lot. So handling roundabouts, handling unprotected left turns, stuff like that.
Right.
And they were like, yeah, it doesn't do that stuff very well yet. They're still working on it. It's beta, right? So it's gotten a lot better. The car takes unprotected left turns a lot better than it used to. It takes roundabouts a lot better than it used to, and other stuff. But you still have to pay attention at all times. So anybody in the audience who thinks I'm going to get FSD beta and then I can just sit back and watch what it does, and whatever it does, I'm fine with. No, that is not the vigilance required to be an FSD beta tester. What you need to be doing at all times is pretending that you're driving. So have your hands on the wheel, have your foot over whichever pedal you would be pressing if you were driving. And then if the car does something unexpected, you're already in position to take over, intervene, and operate your car safely. It bothers me when I see reports of people who had an accident while on FSD beta say, well, the car did this or the car did that. Well, all right, it's beta software, and when you engage it, a warning pops up on your screen that says, pay attention at all times and be prepared to take over. They're not kidding about that.
Yeah.
Those are the rules. You have to abide by those. You are still responsible for operating your car safely. So that's how I do it. I always keep my hands on the wheel and I always keep my foot over whichever pedal I would be pressing if I were driving.
Yeah.
And that way, if there's phantom braking, like if the car sees a yellow flashing light, maybe it wants to slow for that when it shouldn't be. It should be maintaining speed. If your foot's already over the accelerator, you can press the accelerator and not get rear-ended by somebody who wouldn't be expecting you to slow down at that point, as one example.
Yeah. No, I already do that with autopilot, even though I know I don't need to. Sometimes I get a little bit complacent when I'm like highway driving, and I've been like hours and hours of driving, let's say, and like in the third hour, I'm like, I'm getting a little bit complacent. I should pull over, grab coffee or something. And even though I'm on autopilot, I've tried to make that more of a staple in my driving habits with autopilot, because I know at the end of the day, it's just an aid for now. It's not meant to be a level 5 robotaxi, especially autopilot. I'm not even on FSD. So yeah, but so are you still bullish on Elon's comments about this year it coming out?
Yeah, they're making progress. I mean, don't take from my previous comments that I think FSD beta is really bad. It's been getting a lot better, and it is capable of going for long periods of time with no interventions at all. Especially stuff like stopping at stop signs, making turns at stop signs. It's doing that stuff a lot better now than it used to. So yeah, it's making rapid progress. The world is a really complicated place, though. So
Yeah.
I don't want to underestimate the challenge that lies ahead for the FSD development team.
Yeah.
The world is a messy, messy place, and I have to just laugh at the rival autonomous driving competitors who are relying heavily on their own computer simulations. They're trying to create a computer simulation and let their car drive through it, or they're trying to create a physical sandbox area and let an autonomous car drive through that. And even if you can make one of those that's a square mile worth of turns and intersections and stuff, you're grading your own homework. Right? You have presented a very clean antiseptic course for your software to navigate, and the real world does not work that way, right? So I was driving to the grocery store last night, and my FSD beta Tesla tried to move into a lane that a fire truck was in that they had put cones up. Now, I wasn't going to let it run all the way down to those cones in that lane before figuring out that it needed to move back into the lane that it was in, the left lane. But there was a fire hydrant somebody had run over, and it was spraying water 50 feet into the air.
Yeah.
That's never going to be in your computer simulation, right? It's never going to be in your playground neighborhood that you build. To have a fire truck parked sideways in the right lane with the nose of their fire truck edged into your lane that you have to go around them, right?
Yeah.
So yeah, weird stuff happens in the real world. The real world is idiosyncratic and will not comply with your desire for neat, simple, predictable outcomes.
Yeah. Well, I don't know where you're from, but here in Canada, that happens all the time.
Yeah. Fire hydrants run over every day.
Yeah, and there's water spraying everywhere, almost every drive I go out. Yeah. I wanted to get to, by the way, thanks for the super chats, guys. I'll get to your questions probably closer to the end. But I do want to highlight this one. McCurry is saying, any concerns about Giga Berlin shutdowns if Russia cuts off gas supplies to Germany? I'll answer this one, but I guess preliminary first. I think if Russia cuts off gas supplies to Germany, I think we got bigger problems than just Tesla per se. But of course, I mean that'd be a concern for Tesla. By the way, we hit 809 here, new highs in the day. But I would say that's grand scheme. That's a way bigger issue to the people of Germany than just Tesla speaking.
Yeah, I agree with all that. And I think the right thing for the German government to do when prioritizing energy is to let the market figure out how to prioritize their available capacity by letting the prices float free. so that the people who value energy the most will continue to use as much of it as they need, and the people who need less energy will consume less when the price of that energy goes up. That market solution would be a better approach than trying to let the government take a top-down rationing approach to it. And I hope the German government will do the right thing, but I do not have high confidence that they will in that situation. So it's a risk. I don't think we're going to see a shutdown of Giga Berlin due to gas supply, but that factory does use gas to melt stuff. You got to have metal injection for the castings, and they need gas supply for that.
Yeah, absolutely. I have to move up my chart here because Tesla just keeps going up and to the right today.
Awesome.
Stephen also asking, can James talk about when Tesla might claim the accumulated tax deferred loss and when that would show up?
Sure. Yeah. So I think the first time I tweeted about this, it was July of 2020. And back then I had it forecast in Q4 of 2020. It didn't happen. And then I moved it to Q4 of 2021. And it didn't happen then either. So guess where it is now? It's in Q4 of 2022. So I have no good reason to have high confidence that that's when it will occur, because it could happen at any time. But the idea here is Tesla lost money every year for a long time. And almost like rollover minutes, the US tax code does you a solid if you're a corporation that's been losing money for your entire history. They say, hey, you don't have to pay us taxes instantly as soon as in the year that you start being profitable, because you've saved up all those losses. That's called the accumulated deficit on your balance sheet. That's the amount of money, the total amount of money your company has lost in its history. So the way the tax code works is you're allowed to save that money up as a deferred tax asset on your balance sheet. And then in whatever year you believe it is more likely than not that you will be able to use all of the amount that you've saved up over time, you're allowed to net that against your corporate income tax obligation. So however much corporate income tax you owe, you're allowed to knock off that taxable income, the amount of prior year's losses. And you're only allowed to claim 80% of it in any 1 year. So in the first year that you start claiming it, you can't claim more than 80%. But in the future year, you can claim the rest of the remaining 20% as soon as that year begins. So that's how I've been forecasting it every time. 80% of it in Q4, which is 1.6 billion. 20% of it in Q1 of 2023, which is the remaining 0.4 billion available to Tesla. And I will hastily follow that with, and Wall Street's going to back it out as a non-sustainable item whenever it happens. So there's no real help to your adjusted earnings number, because it'll get ignored by adjusted earnings whenever it happens.
For sure. Yeah, which is ironic because when Tesla was getting hit, it's not like anyone was planning that. And then now when they're going to get a benefit, no one's going to care for it. Same thing kind of with FSD, with the deferred revenue almost too. When that hits the books, people go, oh, it's a one-time thing. Let's back this out. But it was never included in the first place. So that's the kind of irony of it.
Yeah, and I'll tag on to that before we switch topics, that if you go looking for the accumulated deficit in Tesla's balance sheet now, you won't find it, because the name changes to retained earnings when it flips from a negative number to a positive number. So Tesla now has retained earnings, which is your lifetime profits to date.
Awesome. Got it. And by the way, look at the stock price. You're, James, it's a good juju that you're bringing in on the channel today. It's 812. I mean, we're just going up and to the right here, it seems.
Up.
Do you have any expectations? We're up about 9.3% today. Did you have any expectations for price action like this last night when the earnings came out? Did you think this was in the cards? Because I didn't.
I do not have insight into the daily moves of the stock price. And it's for the same reason that everyone else also doesn't have insights into the daily moves of the stock price. So if there were any way to know what the stock price is going to do later today or tomorrow, someone smarter than you would have already figured it out and programmed a trading bot algorithm to capture and remove that dynamic from the market, like it was anything else that the market can figure out and price in, and then it wouldn't be there anymore. So the daily movement of stock prices is random except for news. If news comes out, okay, but you're not going to beat the news either, because the trading bots are very fast at reading and interpreting the news. They'll get their trades in before you will. So the investment strategy that I recommend is to buy and hold long term, the same strategy that Benjamin Graham would recommend if he were still around.
It's definitely easier on the stress levels that you have.
You'll sleep better at night if you just buy Tesla stock in 2014 and hold it.
Yeah, well done. Yes, absolutely.
That's what I did. Dave Lee beat me to it. He was investing in Tesla in 2011, 2012. He sleeps fine.
2014, what's the post-split adjusted price on the, I guess I can go back here, but
yeah, $45 probably.
$45. Yeah, nuts. Amazing.
Yeah.
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 And this price action almost feels like 2020 all over again a little bit. Like, I don't know, it's one day, a myopic point of view, but it like what we're seeing here, it's almost like a re-rating from the beginning of the year a little bit, where analysts or portfolio managers were, oh, Tesla's not going to survive what they're doing, with flying colors in Q2 and the shutdowns, and who knows when that's going to happen. And it seems like, I tweeted this out yesterday, it seems like Tesla's faced one too many force majeures, a huge macro re-rating of the market, and has been stress tested and survived handsomely through it. And so, like a couple of years ago in 2020, when Tesla stock was going up and up and up, bears would often have the argument, okay, well, Tesla, one day the stress test will come where all the people that hold long-term in the money options are going to have to sell. Well, that day came and passed. Or Tesla's built up with options premium only, or Elon is buying, that's the only reason. And it seems like Tesla in the last 6 months, it's a fast 6 months, has gone through a lot of stress tests that I think even the staunchest bears would have to say has survived pretty handsomely through it.
Yeah, I mean, anybody who thinks Tesla is going bankrupt is out of their minds. If you're worried about Tesla's financial strength, look up the Altman Z-score for Tesla, and then look up the same number for every other automaker.
Yeah.
And you will have to pick yourself up off the floor if you're not accustomed to those numbers, because most of Tesla's competitors are riding the edge of solvency, according to the Altman Z-score. They are in really tough shape. Like, if you're the CEO and the CFO of Nissan, you're not joking around having a good time talking about when you're going to need to raise money next. Like, It is serious business trying to keep those companies afloat and alive. Yeah. And at Tesla, they're sitting on $18 billion worth of cash with the ability to raise another $5 billion whenever they want for less than 1% dilution. That is completely different. And that's the explanation behind what you're seeing when you see Tesla at a 20 Altman Z-score or whatever, and everybody else below 2 for the most part. You're out of your mind if you think Tesla's going bankrupt. That is not going to happen.
No. Yeah, especially with what I don't know what their cash on hand or cash equivalence is as of this quarter off the top of my head. I can pull it up here. It's 15 plus billion, maybe 20 billion or something like that, cash and cash equivalents. And I think Tesla, sorry, how much?
A whole bunch. Yeah, it's 18 billion of cash.
Okay, there we go.
And that's just that asset account. Tesla has lots of other asset accounts as well.
Yeah.
There was somebody on Twitter who is a veterinarian who was expressing concern about cash burn and how Tesla was burning through all their cash. And I just had to laugh. And they blocked me on Twitter, so I had to go to an anonymous browser to even read what their thread was about. But somebody had asked me to weigh in with my opinion, so I did. And they just didn't bother looking they're just tweeting without checking any of the numbers at all. So Tesla's cash balance has remained at about 18 billion for the past year, while paying down long-term recourse debt from about $8 billion to less than $1 billion.
Yeah.
How do you do that? How were you able to maintain all that cash while paying down $7 billion worth of long-term recourse debt?
Yeah. I know.
You can't do it if you're burning cash. You can only do it if you're generating cash. If you would otherwise have been piling up cash, which is what we're going to see Tesla do, unless they can come up with some other way to spend it, they're going to have a too much cash problem before long.
Yeah. I didn't want to get into this hot debate with you because you probably wrecked me with Tesla buybacks or not. But it feels like I feel like it's the carrots right there. I got to take it. Thoughts on Tesla buyback? Dividends, I was talking about yesterday, I'm not in favor of, because I just don't think it makes sense for Tesla to invest in anything but themselves at the moment. But Tesla buybacks, what are your thoughts on that? And given their strong cash balance and no real need for extra cash past what they're investing already.
So the priority for you as a CFO managing the company treasury is to invest where you get the best return. So long as Tesla has capital projects they can invest in that have a higher rate of return, they ought to be investing in that. What you're signaling to your investors when you start paying dividends or buying back stock is, hey, we can't think of a better way to invest money than doing this with it, or we don't have the capacity to invest more otherwise than to do it this way. So it's just telegraphing a difference from being a growth company that's expanding as rapidly as it can, trying to grow the top line, to a company that is reaching maturity. So I don't expect to see Tesla start paying dividends or buying back stock for a while yet. I think Elon wants to see Tesla become just a balance sheet juggernaut first, before that happens, and for it to be plain to him, hey, this cash is piling up so high,
right?
And our shares are undervalued versus where we think they ought to be.
Right.
Let's go ahead and do buybacks. If you do dividends, you're not giving your shareholders an option about what to do with their tax situation. People live in different jurisdictions, and that income is taxable at different rates to them, depending on their individual circumstances. So if you do share buybacks, you're not forcing those tax implications onto your investors, but they're still getting the same benefit because they're getting it in the form of share price appreciation. So if they wanted to sell their shares and pay taxes, they would still have the option to, and they'd still be getting those cash flows, just indirectly.
Yeah, so we're talking 20 billion, 30 billion in terms of cash equivalents. At that point, you're like, okay, we can start having this conversation at that point, because Tesla can't feasibly invest, a lot. That's the thing with Tesla is such a heavy CapEx business, of course, autos, and wanting to get into more with, refining, let's say, as they were talking about yesterday. But even then, at that point, like, Tesla does stuff at such an efficient level still. I mean, despite what they're doing being so heavy in CapEx, that even I look at the 18 billion, I'm like, yeah, there's a lot of money here that's really not going to be doing much for a long time. But I guess that's Elon's way of just like protecting and having the kind of treasure trove just of money laying around in case it's needed.
Yeah, I think he went through so many sleepless nights and problems with Tesla running low on cash in the past. He just doesn't ever want to go anywhere near that problem again.
That's fair.
And that's what paying down the long-term recourse debt in advance is about. It's about cleaning up the balance sheet so much that it will shame Moody's and S&P into a credit rating upgrade. If you've never seen the comparison that Madame Alexandra S. on Twitter did of the financial strength of the top 20 companies by market capitalization, along with some automakers, Tesla's metrics are green across the board. They're as green as Google and Apple and Facebook, greener in some cases. And Tesla is rated speculative. still, they have the highest speculative rating, BB plus or something. I can't keep them all straight.
Yeah.
But yeah, they're not rated investment grade like
Yeah.
almost every other company is, and some companies that have much worse ratios in terms of financial strength.
Yeah. I think that's going to happen even this month. I should say maybe that's pushing it a little bit, but the next 30 days, I think we're probably going to see investment grade credit by S&P or Moody's, just because when I was reading their paper last year, one of the caveats that they had was they wanted to see Berlin and Austin start producing and the margins not get hit as bad as, and their margin baseline was like 5 or 10% or something, like something very low. So I'm thinking now that this report, well, once this 10Q comes out and we get to see and Tesla explicitly said in the report that Berlin is operating at a positive gross margin, I reckon we probably get that upgrade here in the next couple of weeks. That's my guess, at least.
Yeah, I mean those stipulations are ridiculous and bogus and unrelated to the position of Tesla's actual balance sheet and
Yeah.
actual income statement.
Yeah.
Tesla's profit margins are world class, industry leading at this point, and it is beyond hypocrisy for them to be like, oh well, let's just wait until they have another couple of factories producing cars profitably. Well, how about General Motors closing factories? How about Ford stalling production at factories? Do those not count against their ratings? Do those companies not deserve a downgrade for shutting down unprofitable factories?
Yeah.
You're not going to give the benefit of the doubt to the company that has, beyond any argument, stronger financial metrics.
Yeah.
And they're not because, well, I've said enough probably.
Well, yes. I mean, there is some sort of there is something there for sure. It just also feels like Tesla got successful so quick in terms of their balance sheet. Like they turned the tide so fast for a company of their magnitude that it's almost like they're instead of bothering to speed up the process to catch up Tesla, they're like, we'll take our time because we don't actually care for you that much. That's what it almost kind of feels like. One of the slides, by the way, that I wanted to get your thoughts on yesterday, we got some projected capacity numbers, very loose, by the way, from Tesla in terms of, okay, Berlin greater than 250,000, Texas greater than 250,000, Fremont breakdowns. And they all added up to about 1.9 million in terms of capacity that is stated as the bare minimum. Not today, but where Tesla sees itself as they continue the ramp. I get this question a lot. I'd love to get your thoughts on it. At what point do you think Tesla needs to needs to look into new factories? At what point do you think capacity is a concern? And at what point of the scale, how do you time that properly? Because it's going to take some time to build up that factory and then, of course, get into ramp, as we know.
All right. Well, maybe I will share my second screen again, and we can take a look at a chart. Let me hit share here. I'll make this bigger so it'll fill up your screen a little better.
Alrighty.
So here's where we are, Q2 of 2022. These are actuals here. And these are just all the vehicles that Tesla produces. And here's what I'm forecasting to go. So what Elon said on the call was 40,000 units produced per week by the end of 2022. And I am forecasting a little less than that, but I think the number he's referring to is the run rate as of the last week of Q4.
Okay.
Right. So this is where Tesla can grow from here using only the factories they already have or have announced. So in the case of this yellow wedge here for Shanghai Model Y, I've got this growing to include production from a new factory that they're going to build in Shanghai that eluded many people's attention, even people who follow Tesla, because it was just downplayed so much when they announced that they were going to build another factory in Shanghai. Right. We don't know exactly where, but it's not going to be very nearby the existing factory. People aren't thinking of that as a new factory. They're just thinking of it as an expansion to the existing one.
Right.
But that'll be another 450,000 per year worth of
Mm.
design capacity. And when Tesla says design capacity, they can do more than that, because they for several years have been uh, reporting production capacity for Shanghai well below actual levels.
Mm.
So they have figured out how to squeeze more production out of less square footage and continue to do so. There's only so fast you can run it, though, based on how much capacity you have to paint. So paint will only dry so fast and
Mm.
still look good. There's tricks you can do to make paint dry faster, but if you still want the paint to look exceptionally good, you can only run the line so fast. That's going to be your bottleneck.
The best paint is no paint. Cybertruck.
Yeah, it really is. Like, if you think about how much money Tesla is going to save not having to build paint shops for Cybertruck and not having to spend time on that, the line
Mhm.
for Cybertruck could potentially move faster without that bottleneck there.
Mhm.
But yeah, these are just some of the charts that I include in my forecast threads when I tweet out my
Your
Tesla
famous
forecast updates.
69 thread. By the way, let's
Yeah,
just pause and take let's just be in awe of the quality of your charts that you have here. This is awesome. And for anyone that doesn't follow James, it's I cannot underscore enough. Did I get that right on Twitter?
you got
Uh,
it. Yeah, I
and
put it in my name description at the bottom. So
okay, perfect. And his channel also is in the description. So go subscribe to him as well. So you're looking at vehicle deliveries, and you're saying at this point, Tesla doesn't really need to put their pedal to the metal just yet to look for a new factory, mostly because of that Shanghai kind of expansion that was kind of dusted under the rug a little bit.
yeah, Tesla has a lot of fish to fry to get from where we are now to just building out what they've already announced they're going to have in terms of factories. Um, Now, they haven't announced the buildings where Semi and Cybertruck are going to get built, but they're already building some semis in Nevada, and Cybertruck will get produced in Austin, Elon said, beginning or middle of next year.
Hmm.
So uh, we don't want Tesla to wait until they're done with this to announce more factories, though. They will have
Right.
to announce more factories between now and then, because there's a lot of work to do getting bids and approvals and contractors and construction vertical.
Yeah.
Yep. Um, but yeah, just flipping through
Love it.
my array of charts here.
This is great.
The one that I hey, what's this? Oh, log charts can't have negative values. All right, fine.
That is mathematically true. So
Yeah.
if you look at 4.7, let's say if 50% CAGR on Tesla is 936 last year, it's about 4.7, 4.8 million cars in 2025. And so at that point, I'm sure at that point, how many factories does Tesla need to be running, let's say going to 2026 for them to continue to hit their growth goals at that point?
Uh, I mean, if you figure 500,000 capacity for factories, then you have to have 8 of them to make 4 million cars, right? Um, the land Tesla already owns in Austin is large enough to build another, I want to say 7 or 8 of the building they already have.
Hmm.
So and they are nowhere near tapping the potential of the building they have already.
Right. So it's not going to be city expansion. You're mostly looking at the lands that they already have, kind of like Shanghai, and then expanding it from there to hit their growth goals for the next couple of years. It sounds like. I'm just trying to get a gauge at like what time period should we start to worry as Tesla investors? Like, okay, at this point, Tesla hasn't started looking for factories. What's the deal here?
Uh, I don't know that I've thought that question through enough to give you a date
Okay,
when you
all
would
good.
need to start worrying. But I'm
Still get the
trusting
social one.
Tesla to announce those expansions when it makes sense to. And I would expect for none of the new factories to be built in California because California wage rates are very high and the labor laws are ridiculous and the politicians are too big for their britches.
Hmm.
So I think Tesla is not going to be doing a lot of significant investment in California beyond what they have already there.
Mm-hmm. I'm not sure if you know this. I'm kind of a Canadian gigafactory shill for Tesla. I think Tesla should have a East Coast Canadian gigafactory, better exchange rate, still almost same amount of human capital up here. And there's like legacy auto areas in like Windsor, Ontario, for example, where the factories kind of exist there. I know Tesla really doesn't want to rehab factories again like Fremont, but I'm kind of a shill for that for the East Coast. But that's assuming that Austin doesn't already satiate the demand as we kind of expand Austin. So
Windsor, Ontario is way too close to Detroit, Michigan for Tesla to invest any money there. That is my feeling on the matter. I would draw a 500-mile radius around Detroit and guarantee we're not going to see any Tesla investment in that area.
is that just because the Michigan rules where you can't sell
Ah,
cars still, or what am I missing? Just too
well,
many shells.
lake effect snow for one, right?
Oh,
You don't want your factory buried under 3 feet of snow overnight. So that's one of your concerns building in Canada. I know not all parts of Canada, before I get hate mail from anybody, not all parts of Canada are subject to getting 3 feet of snow overnight, but Windsor is.
that's true.
So I would rather see them build another factory in Texas.
And another one in Texas. Fair enough.
Personally, yeah.
Probably better for Elon and SpaceX too. Awesome.
Yeah, better for the carbon footprint of Elon's jet to keep
Yeah.
things tightly concentrated in the South Texas area.
Yeah. No
For those who
kidding.
haven't been to Texas before, Texas is large. It's a
Yes.
very big state.
Oh yeah.
My favorite fact about Texas is people living in El Paso, Texas. We may have some viewing our program right now. If you're in El Paso, Texas, you are closer to the Monterey Bay Aquarium in California than you are to Wascom, Texas.
Wow. Really?
Yeah,
Wow. Texas is huge.
yeah.
I've only been to Dallas. It's not like I've been touring on the state of Texas. But some of the facts that you hear about Texas, like I heard, and this could be just totally like a urban legend or whatever, but you could like give everyone in the U.S. like a house in Texas and still have enough room between people. Like some of these like it's just Texas is huge for sure.
Yeah, if
Um,
you've never driven across Texas, try it sometime. It's clear your calendar. You're gonna need at least a full day to get across Texas. It is large.
Yeah, for sure. Awesome. Well, we have a couple more minutes here left with you. Any kind of parting remarks that you want to leave the audience with? By the way, everyone go subscribe to James's channel and follow him on Twitter if you don't already. But what are your kind of concluding marks on the quarter and let's say the end of next year? And we'll have you on hopefully again, if you're open to it, another time before the end of the year to get some updated financials. But what are your general thoughts to wrap up the quarter?
Sure, yeah. Well, we knew Q2 was going to be down sequentially and not a record quarter because of those Shanghai lockdowns. I put out a couple of videos about that on YouTube a couple of months ago. So anybody who watched those got the news in advance that it was going to be a down quarter. But it was better than we expected it to be. The revenue is stronger. The ASPs were stronger than most people expected. That's good news. More of those price increases are coming through already. Tesla's making more of the highly optioned vehicles, probably to boost that number. So really good management from the Tesla team. I know Gary Black is super happy to see that Tesla sold 75% of their Bitcoin and hopes they don't buy any back later. But yeah, expect a return to all-time records for any quarter as of Q3, and then they'll break them again in Q4. That is what I'm expecting. Finish the year right. Still maybe a chance at doing $15 in EPS for the full year 2022. And then I'm expecting about double that in 2023, which Wall Street is not expecting at this point. So that's the update from me.
Awesome. So 14-ish bucks for this year, let's say. I don't know.
Yeah.
14-ish EPS, and then 28 is what you're expecting for, or were you forecasting for 2023 at the moment?
32.
32. Wow. Well,
yeah.
Wall Street's probably at 18 or something like that. I don't even know what they're at.
Gary Black tweeted this morning that Tony Sacconaghi upped his price target 21% from $16 to $19 for next year. And I said he should have upped it 100% from 16 to 32 because that's where I am.
That's where you're at. Awesome. Well, love it, James. Thank you so much for spending time here with us and sharing your awesome insights. And hopefully we can have you on another time.
Well, you're very kind. Thanks so much, Yashu. I appreciate it.
Thanks, everyone, for tuning in. And go subscribe to James' channel if you haven't already. Link is in the description. Take care, everyone. Peace.